David, thank you. Yes, we're sitting down with the CEO of Marriott, Tony Capuano. Tony, thank you for having us
here. Good morning. Welcome to the new Ritz-Carlton Nomad.
There you go. 250 rooms, 10,000 square feet of space for business travel as it picks up. This is an exciting moment. Is this reflective of where Marriott sees the opportunity going forward, the luxury segment?
Well, certainly we're very focused on luxury. Luxury represents about 10% of our global footprint in terms of rooms, but it generates about 25% of our RevPAR-related fees. And it's also a big payoff for our Bonvoy members. They are so loyal to us, and one of the things they love to do is redeem those points for stays in our luxury portfolio. So we're growing across segments, but luxury is critically important.
The Ritz historically has been a brand that appeals to the higher income foreign traveler. We're starting to see more Americans go overseas, but international arrivals to the U.S. still not quite back to 2019 levels. When do you think that changes?
Hard to say. I mean, obviously, when you see what's going on with the strength of the dollar, that could have some impact. But we continue to see slow, steady growth in inbound international travel.
That's exciting. I mean, luxury historically, when you look at past economic cycles, it's fared better. But now with the stock market underperforming, how do you think that changes going forward?
Well, the performance of the luxury portfolio through the first quarter was remarkable. We saw average rates up about 30%, and we continue to see really strong demand, particularly in leisure destinations. So we expect to continue to see strong demand for luxury.
Part of that, of course, in the conversation is around higher prices. It's not just airfares, it's hotels as well, Tony, with here in New York, $300 a night on average to check into a hotel, up 20% from 2019 levels. At first, the conversation was, well, great, hotels are commanding pricing power. But now the question is whether this is sustainable. What are your thoughts?
I think it's sustainable if we deliver on that service promise. Obviously, one of the big challenges that the entire travel and tourism sector faces is a labor challenge. We continue to do everything in our power to make sure our hotels are staffed, our teams are trained. If we're going to continue to experience this strong pricing power, we've got to deliver on service.
Yeah, talk about service. It's been pretty chaotic when trying to travel right now. Delays, cancellations. You've been meeting with the airline CEOs. What's your take on what's happening right now? And are they using the pilot shortage as an excuse?
Well, better question for my friends that run the airlines. I do think there's a confluence of challenges. I do think ground staff, TSA staffing, air traffic control staffing, all of them have their own unique set of challenges, which are contributing to some of the delays and traveler frustration we've seen through the busy summer.
Do you think it gets better by the fall?
I sure hope so.
Yeah. Let's switch gears a little bit. Obviously, interest rates top of mind. We have a Fed policy meeting next week where Chair Jerome Powell is expected to announce another rate increase. Hotel construction has slowed down. How does that fare going forward?
Well, again, the good news, as you and I have discussed in the past, most of our owners are long-term investors in the sector. They don't necessarily try to time construction starts or openings based on economic cycles because they intend to own these assets for many, many years, if not decades. Obviously, interest rate environment makes it that much more challenging to secure construction financing. There seems to be plenty of debt for existing assets. But our focus is partnering with the owner community to try and secure debt financing for new construction.